If you ever want to become a consistently profitable trader, there's one thing every one of you have to understand. You need to have a trading journal and you need to spend a lot of time going through that journal. In today's video, I'm going to show you the process that I use on a weekly basis to improve my trading, and this is a huge part of my success as a trader, so this is something you really have to pay attention to. All right, so it's time to look at the journal here. So it's Sunday. Every Sunday, I kind of go through the journal and go through all my trades to see what I did right and what I did wrong, what I need to do to improve next week. And basically, this is such a key aspect of professional, successful trading. If you want to be a trader, if you want to be become a consistently profitable trader and maybe get funded or trade your own account, this is not an option. You have to have a good journal and you have to do regular reviews of that journal. Most of you in the community already know this, but I want to go through this journal and do it with you guys live. And this is a very special weekly review because it's the first week. I believe this is the first week after testing the new system. And if you haven't been following that, we did some testing last month because I remember March was a really bad month. We had a pretty decent drawdown period during March, and then April I started testing a new idea. And if you've been following me for a while, you know that part of the system is, I have four take profit areas. I exit 25% at each take profit area. And what I tested was basically the idea of exiting fully at TP1 and also having a tighter stop loss. So here you can see exit 100% at TP1 and then have a tighter stop loss. And what I did here was I tested an alternative strategy, and this is a great function here in this journal, Edgewonk. And here I tested these two combined, and you can compare the risk to reward here. The alternative strategy is red one, and the actual trades are the green one. And now obviously I've implemented this. You see that it no change because I haven't added anything more here, but I've just, and you see actually right here, this is where I started implementing this, and you can see right away we had some really good results. And this is this week, right? So this week is the actual first live testing of the new version of the system, and it's just incredible how good the results were. But there's also some things I think I might not have done so well. I have taken a lot of trades this week, and I do think that I've taken a lot of trades, and some of them probably impulsive ones. They were winners, so it's like I got rewarded for making stupid mistakes, and that's not a good thing. That's really detrimental to my long-term success. So we have to look at those, and we're going to be talking about that as well. You have to be very honest with yourself, right? If you take a bad trade and it's a winner, it's still a bad trade, right? A bad trade is always going to be a bad trade, no matter how big that, if it's a winner or not. We're going to look at the equity graph right here. You see the gain loss in dollar percentage. We see we have the win rate at 55.74%, and this journal started this one in November last year. So this is 55.74% win rate, and it's perfect. Like 55% win rate, that's what I believe with my personal approach to this system, I should be at around 55 to 60% win rate. And if I'm at 55%, I'm very happy with that. You see the profit factor is 1.83, also very good. And this was that drawdown period I talked about, right? This right here. And this is where we started implementing the new version of the strategy. So this is the equity curve in dollar value, the gain and loss in dollar value. So you can see, obviously, we started at 0, and now we are up at around 14K USD in profit since November. And the interesting part here is if you look at the R multiple chart, and this is basically this will give you the return of risk on each trade. It's just absolutely crazy to see this, because this is where, you know, this is where we started the new strategy, the new approach, and it's just absolutely skyrocketed. It's just, this shot is just rather, it's just insane, right? So we're now up at 16 R, very, very good. And I hope we can continue like this. That would just be absolutely amazing. But we also have to be, I have to be honest with myself and understand that it's not going to continue like this. We will have more dips. We will have more retraces in the equity curve, and I have to be very careful next week to let go of this week, because this week has been really good, one of my best weeks. So you can go to the home here. We can see that the weekly win rate, obviously the same as the monthly, but the weekly win rate is 71%, very good. Return this week is 3.54%, also very good. And max drawdown 0.49%, also very good. And the return of risk is 7. That's just absolutely insane, right? So which means here, if I would have risked 1% on all trades, I would have been up 7%, which is just very, very high. Now, of course, I've taken some riskier trades, and I've used lower risk on the riskier trades. I've risked 0.25% of my portfolio on the riskier trade and the more impulsive trades. I think that's a good idea, but just to give you an idea of why the profit is half of this, because, you know, some of the trades are lower risk. So let's go to reports here. We can go to reports. We're going to look at the calendar. Now we're going to look at the monthly reports, and we will see that you have May, the first week of May. I took 7 trades this week, and you can also look at the average of trades. This is, you know, I'm at 7. The first week of May, I'm at 7, and the whole month of April was 12 trades. So you'll see here that I'm trading too much. I'm basically I'm taking way more trades than I normally do. So let's take a look at these trades here. It's 1, 2, 3, 4, 5, 6, and 7 trades. And we're going to go through these and talk a little bit about this. I have, let's see. Let's start with the GBP USD first and foremost. Do I have any comments on this? No. So let's take a look at the screenshot here. So what I really want to ask myself whenever I look at a trade, I want to ask myself, was this a trade according to the system? Was this a good trade? And also, I only posted, I believe, let's see how many trades I did post in the Discord channel this week. Let's see, we posted. So NCD JPY, AD JPY. Yeah, I only posted 2. So I only posted AD JPY and NCD JPY. The reason I did not post any other is because I do believe that these are rather impulsive trades, not trades that I'm very confident in taking. And you can see here that this was a 0.25% trade. So let's go into TradingView, and we're gonna look at GBP USD. I'm gonna break down the trade for you guys to see if this was a good trade or not. Now, as you can see, like, this will be a longer video, and it's gonna take a little time, but you know, I'm more interested in giving you guys more of a long form videos here. I don't want the videos, you know, I've tried that, you know, I've tried the quick videos where it's like I'm hyping up and it's like it's gonna be quick because people have a very, their attention span is very short. They, you know, so, but I believe that the people watching this video are interested in learning to trade, and you can't just watch a 5-minute or a 10-minute video to learn how to trade. You have to actually spend time learning these things, and that's why I'm going to record videos that are longer, and I'm not going to try to dumb them down. It's just going to be exactly what what I'm thinking, how I'm doing it, and it takes time, all right? It takes time. All right, so this one right here, was this a bad trade or was this a good trade? Let's use the replay function. I believe that it's here where I get the long signal right here. And honestly, there's a couple of things that I'm not so sure about with this one, but it's actually, you know, it's looking pretty good. I don't really remember why I didn't post a trade on this one. Maybe I actually did. I have to go back and see if I did. No, I did not. So that's the signal from the indicator, and I believe that this is where I started getting interested in perhaps taking a trade. So let's go back to the journal to see like where exactly did I entered at 1600. So that's the signal, and then 1 hour later, yeah, so I entered at 1600, which means I entered on 1 hour. Let's see. I entered here. So you got to be on the next candle. Yeah, I believe I entered on this candle, okay? So that's my entry, and I probably market entered right here. So let me walk you through what this trade was based on. So what happened here is I have the fib drawn from that low to this high, which brings in the reload zone right here. And one of the reasons I did not take this trade is because price went lower than the reload zone, and price actually went all the way down to this first anchor fib. So price went below the reload zone. And when price goes below the reload zone, we can have wicks going below. That's not a problem. But when there's candle closures below the reload zone, this fib is invalidated. So this would actually not have been a trade for that very simple rule. And you might be looking at this and saying, well, it's a winner. Yes, it's a winner, but it's actually not a good trade. This is actually a bad trade because it's not following the plan of the system with having these candle closes below the reload zone. But I really like the structure. I really like the structure. And what really got me interested in taking this trade is, first of all, we had that long signal where we had like a bounce around the reload zone, and then we had that stochastic RSI giving us a nice round the bottom as well. And then you have that 4 hour candle closing above the 50% fib. And usually what I would want to do in that case is enter orders on the 50% fib and then have stop loss somewhere down below the reload zone. In this case, I waited for confirmation on the 1 hour. So what I waited for was an actual confirmation of a bounce here. And you can also see that there's, I also did some market structure analysis here on the 1 hour, which basically means, you know, you have a high, a low, lower high, a low, a lower high area, a lower low, and then let's say that that's a lower high area. So you basically have a downtrend going like this. And with this move, with this move going above here, you'll see that you're breaking market structure. You're breaking this level right here, which now you have a bearish market structure, and you're now breaking out into a bullish market structure with a higher high and let's call it a sequence of maybe higher lows. Let's just say that that's the low, that's this high area, and then this is the next higher low, and that's the higher high. So you actually have a bullish break in market structure, and that's the confirmation of a bounce. So that's the 1 hour bullish candle, and that's also a long signal. And when I saw this and price started trading higher, I believe I market entered right here, and I had a very tight stop loss. So what you have here is a combination of a 4 hour swing trade, which is not perfect, not according to the system. But then you go into 1 hour, the lower time frames, and you see this beautiful break in market structure. That level that I wanted to buy is actually acting as resistance. And as soon as price started moving higher, I market entered. And this is then the results. Price hitting that monthly open, the monthly weekly open as TP1. And if I would be trading this idea as the original system, I would have had these fib settings on like this. This one right here, and then I would have the last TP up here, and I would exit 25% here, 25, 25, 25, and you'll see that it probably worked out well. I don't know, like, let's see. Yeah, it's pretty good. But what I found, you know, testing the idea of exiting fully at TP1, and in this case here, you also see the weekly and monthly open is acting as that first trouble area, because if the weekly or monthly open, or the combination, because now the weekly open and the monthly open is the same, obviously, because Monday was the first day of May. When you have the weekly and monthly open like this, front running the 0% fib, that's going to be my TP target, and as long as the risk to reward is above 1, I'm good with that, right? So this was a almost 2-hour trade. What started as a bad idea as a swing trade turned out to be a pretty decent idea on the 1 hour. So let's go back to the journal, and if I have to, sorry about that, I had to pause the video. My son is tearing down the whole house. I had to just ask him nicely to go somewhere else and make noise. So where I'm not sure where I was, but yeah, let's go back here to the journal. I'm gonna, you know, try to speed this up because it's already been 15 minutes with this one trade. But yeah, this is I went into here, advanced data, and I selected not according to plan. So not according to plan because yeah, it's not according to plan. It's just not according to the system. But I have to say that I made the right decision here. I made the right decision by taking this trade based on low time frames. But I have to be very careful with this type of approach where I'm not really, you know, 100% according to the system, but it works out anyway. Because what this might lead to is I'm getting rewarded for taking trades that are not 100% according to the system, and that is very, very dangerous. So there is an opportunity, or there is a definite possibility that this is one of those moments where I'm getting rewarded for a bad trade, and I think it's a good trade, but I'm actually leaning towards the lower time frames, kind of confirming this bounce being a good thing. Let's go on to the next one. The next one is USD CHF. Look at the screenshot. Now this is just a bad trade. A bad trade. Why is this a bad trade? Well, you know, you got to look at the date. When did I enter this? The 3rd of May, 1955. The FOMC is on the 3rd of May, 2000. So about 5 minutes, or even less than that, maybe 3 minutes, I entered this trade. And I exited right down here. So 2-hour winner. Now, this is a bad trade. It's not according to plan. It's an impulsive trade. I took this trade just because somebody, an analyst I respect and follow, a good macro analyst, said that USD/CHF is going to dump. I'm like, oh, you know, fuck it. Let's just take that 0.25 hour trade and see what happens. And the winner. And in this case, I absolutely 100% got and this is even on the fucking 15 minute. I never traded 15 minute. I got rewarded for making a mistake. How big was this winner? Not super big, 0.5%, but you know, 2.15R, 0.5%, not according to plan. Absolutely not according to plan. You can see the tilt meter here as well being red. So I don't know. It's a bad idea. So we start with GBP USD, which is kind of like almost a bad idea. USD CHF being absolutely 100% a bad idea. And then let's take a look at Euro GBP. Now Euro GBP. When did I enter this one? May the 4th. May the 4th be with you. Now, I like this one, but it's not according to plan. Let's take a look at this one. Euro GBP. Euro GBP. That's the trade right here. Let's see what we got. Now, that's the short signal, okay? This right here, this short signal was what activated this trade for me. Now, why is this not according to plan? Very simple. Again, it's because of the fact that price goes above the short RLZ and closes several 4-hour candles above the 0.786, and that's the reason for this to not be a trade according to the system, according to the plan. But what happens if we move the fibs here? If we move the fibs here, the rejection happens on the 0.618, and now the 50% is confluent with the moving averages and all of that. Now, the best way to take this trade would be to look at that candle, that short signal, and I would then place orders around this area here, TP down here, and then stop loss up here to our trade. That would have been a trade that would have been somewhat according to the plan. But then again, we have this major daily horizontal support and resistance level right here, and that would basically mean that we're shorting into support. So we can't use that fib. That's just not a good trade. Now we use this fib instead, and I gotta be honest, I don't think this was the best trade. I mean, I know I can do better, right? I know I can do better than to basically short daily support. But if you look at the 1 hour right here, I just really like this structure. Okay, I really like this structure, because you got to remember that this level right here, that's the EQ, that's the middle or the equilibrium line of this daily horizontal support and resistance area. So this level right here, that's like the, you can also very clearly see that it's a very strong and clear horizontal level here on the 1 hour. And that break lower kind of tells me that, you know what, this makes perfect sense. The price is kind of like having that uptrend into the reload zone and then breaking that structure, going lower, and then breaking that middle line of the horizontal level. I really like this, but it was not 100% according to the plan. So for that reason, I decided to risk 0.25%. I do believe that's a 0. So I risked 0.25% on this trade as well. And you see that it turned out to be absolutely perfect. Look at that. I entered orders right here and just boom, hit that entry target and straight down to monthly and weekly open. Just absolutely perfect. So now the question is again, did I get rewarded for a bad trade? And I have to say, this trade is almost like the GBP USD trade, where I gotta say that on the 4 hour, absolutely not a good trade. On the 1 hour, however, very good. So what I did here was combining the swing trade idea with the 1 hour structure, and I have to kind of lean towards the idea that this was actually a trade according to plan, but I had to select it as not according to plan, because remember, I'm trading the daily and the 4 hour. That's my system. That's the way I'm trading. That's what I've tested. That's my plan. If I take a trade which is not according to that plan, it's just not according to plan. So I have to select it as not according to plan. But did I get rewarded for stupidity? I'd say 50%. On USD CHF, I got 110% got rewarded for stupidity. On Euro GBP and GBP USD, I don't know. I'm not really sure about that. So a good practice to do when you're in this scenario where you're not really sure if you get rewarded for a bad mistake, you can ask yourself, what would I say if these two were losers? If Euro GBP and GBP USD were both losing trades, how would I have reacted, and what would I have told myself? Well, like honestly, I gotta admit that I would probably stand here and tell you guys that bad trades, bad ideas, never do that again. So by having that logic and that perspective, kind of taking a step back and having another perspective on myself, I think it's a bad idea. I think it was a bad idea. So yeah, I probably got rewarded for stupidity on these 3 trades. So basically, 1.4% of last month profits is probably based on bad trading. All right, so now let's take a look at USD CHF. Trade number 2 on USD CHF. Was this a bad trade, a bad idea? Let's take a look. This was on May the 4th again. USD May the 4th. This one? Yeah, it's that one. Was this a bad idea? Yeah, terrible idea. Bad trade. Very bad trade. Very bad trade. Why, I'm not even gonna go through why it's a bad trade. It's just a terrible trade. Let's again see what I selected that one as. That's gonna be not according to plan. All right, next one is NZD-JPY. Now, NZD-JPY was obviously a loser, but it was a loser because I actually, this was a mistake with trade management. So let's take a look at this one. Oh, wait. So yeah, this trade right here, I decided to enter buy orders on the monthly open right here after this trend line break into the upside, because if you look at the 4 hour, the swing area, it already hit the 50% fib of that move, and you also have the daily moving average right below. So yeah, this was a great bounce on the 50% fib, and then it kind of broke structure on the 1 hour, and then it just started moving much lower. So let's take a look at this one, because this is very interesting, and I have a great point with all of this. So I'm very sure about my problems this week, and I'm actually also very sure that my profitability would maybe have been better or just slightly worse if I just followed the plan and I traded less. So when we've gone through all the trades, I'm gonna tell you what my problems were, what my mistakes were, and how I'm gonna solve them, and what I'm gonna think about going into next week. This is NZD-JPY, and we got two trades here. So I'm gonna look at the post I made in this channel here. Yeah, so this was the first trade. This was that trade, and I exited around. Yeah, I actually got out of this trade here. I got out of that trade here because I had a different. Yeah, so I exited this trade here, took a. I believe 0.5% loss. Yeah, so 0.5%, around 0.5%. I exited this trade here, and I think I exited this trade based on fear. Right, I really didn't want to lose this trade, so I exited that trade based on fear. And then the next trade, because when I saw that price started moving higher again and reclaimed the monthly open, when we had the 1 hour candle closing here, I decided to, you know what, I made a mistake on this one. And this is a very important point that I want you guys to think about and remember. When you're in a trade and you close that trade at a loss, and then you see price then moving above entry and then confirming the trade again, you got to enter that trade again, because the technicals are still valid, but you just made a mistake. So you gotta forget about that mistake and enter the trade right away. And that's what I did. So I said right here, I'm exiting here. I don't like where, there's no reaction on the monthly open right here. And then right after, I said, same trade, different stop loss, higher risk on this one. It was a mistake closing the last one. Moving stop loss up was the right decision, but I should have waited for that new stop loss to get hit instead of exiting early. So yeah, what I did here was I posted a new trade, and this is the one, and it hit TP. Actually, the original TP was up here, but I decided to actually exit this trade early because I was already up 1.44, and I really felt like I wanted to end this week in profit. Next week, one of my main focuses will be to check this NZD JPY trade to see if exiting early was a mistake or not. Probably was. That was an impulsive decision. Let's see if the trade goes up to original TP, I would have obviously been much better staying in. So on this trade right here, this trade, the one that was a loss, the mistake here on this NZD JPY was to exit before my stop loss get hit. And then we have the NZD JPY trade, which is this one that we're looking at. And then we had the AUD JPY trade, which is the last one, which is this one, where I exited here as well with original TP being here because I felt like it hitting resistance, and it might not hit the original TP. But if it did, if it's going to hit that original TP, I made a huge mistake of exiting NZD JPY and AUD JPY earlier than last TP getting hit. So let's go through it. What were my mistakes last week? And I'm going to bring out the calculator here because we're going to calculate how much what my profits would have been if I only took the trades that were actually good trades. So GBP USD, was this a good trade? No. And how did I come to that conclusion? Because if this would have been a loser, I would have told myself that it was a stupid mistake. Okay, so yeah, remove that trade. USD CHF, absolute terrible trade. Euro GBP, also a bad idea based on the same principle of GBP USD. USD CHF, that was a bad trade. Okay, so now we're at 0% profit because we're removing these. Now NZD JPY, that should not have been a loser. That should not have been a loser. I made a mistake on that one. So the ones that are left is AUD JPY and NZD JPY. These are the only two trades which are according to plan and make sense according to the system. And it's also the only trades that I actually posted in the community. So we do 1.52 plus 1.36. So if I took only these two trades, and did it in the right way and did not take any of the impulsive trades, I would have had a 100% win rate, and I would have had only two trades. But obviously you see the return here is 3.54. So we do minus 3.54. The profit, the difference here in profits would be 0.76. And it's not a big difference. The difference, however, is quite huge because it's 5 trades less. And I believe I took these trades on Thursday. So Monday, Tuesday, Wednesday, no trades. And then Thursday, 2 trades and closing them on Friday. And I make, 2.78 R, 2.78% profit for basically working 20 minutes on Thursday. And that's it. Instead, what I did was I took 7 trades, with 5 of those trades being impulsive, bad decisions, but I got rewarded for my stupidity. So my real profit and loss last week should have been 2.78. 2.78, that's my real profit, and the real number of trades should have been 2. If I stick with everything according to plan, that's my profit and loss. So we gotta ask ourselves, is it worth missing out on 0.76% in profit? And I would say yes, 100% worth it, because these 5 trades that are based on impulsive decisions where I basically got rewarded for my stupidity, do you think the win rate of these 5 trades are the same as the original system? Probably not. Maybe they're only like 30%, and I got lucky. So this happens to be that weird system that I haven't tested, maybe it has like a 30% win rate, and maybe I just got lucky, had a winning streak last week. So even though it's a very good week, one of my best weeks actually, for a long while, I got to be honest with myself, and I have to tell myself that I overtraded. I made a lot of bad mistakes and impulsive decisions, and I got rewarded for my stupidity. So what I have to do is next week I have to take a step back, meditate a lot, and trade less and only take the very best setups. And also very important to monitor AUD JPY and NZD JPY to make sure that if they hit that last TP, I got to remember to basically remember that I got to stop exiting trades too early. I need to let them run to that last TP, the TP that I have had planned. And I mean, on NCJPY, stops are at profit, and AUDJPY stops would have been at profit as well. I mean, at stop loss. So I wouldn't have lost anything on these trades. It's just better to let them run. You always have to give the winners the opportunity to let them become big, you know? All right, that's a long video, but this is the process that you guys have to go through. I'm gonna continue uploading these weekly trade reviews whenever I have something interesting to go through with you guys. All right, that's it. Thanks for watching, and I will see you guys in the next one.